So recent concerns over the current tech bubble is being amplified by a historical comparison to the dot-com era, where valuations were similarly stretched and FOMO, which is the fear of missing out, fueled massive speculative buying. The Federal Reserve Chair Jerome Powell has made past remarks acknowledging that stock prices are fairly highly valued, a comment that echoed Alan's Greenspan's prior warning about irrational exuberance, which was just before the dot-com crash. This environment, which is characterized by high valuations and psychological pressure, underscores why it's not smart to buy at all-time highs without careful scrutiny. Buying purely on the fear of missing out at peak valuations increases the risk of significant losses if the bubble bursts or the market corrects. So about 2.5 months ago, before CrowdStrike got to 531, this was my analysis. Take a listen. Above current support, if buyers can keep the stock above 418, then I want you guys to look for a 6% run to 452. And if they can get above 452 and stay above it, then look for a run to 468. And from current price, we're looking at a return of over 10%. Overall, to the upside, my price target for CrowdStrike is going to be at 531. So at the time of that recording, CrowdStrike was trading at 424. The stock did end up pulling back, but if you listen to my analysis and you took a look at my chart, you can see that these levels were already drawn. So any pullback that occurred was a massive buying opportunity to then take aim at 531, which then yielded a return of over 25% from the time of that recording. Now, about a month ago on this pullback, I told you guys that if SOFI stock could turn around, then look for a run to 3108, which was my price target. Take a listen. Now to the upside, the stock did came short of hitting my full retracement target at $31. So if we do see a turnaround in the stock, that is going to be my upside target. And looking at the current chart, you guys can see that today that target was hit. Now, billionaire investor and founder of Bridgewater Associates, Ray Dalio, said that the market is showing signs of a bubble. Take a listen.
Do you think that concentration is indicative of a bubble?
This is the big question, right?
I know. I'm eager to hear your thoughts.
There's a lot of bubble stuff going on. I have a bubble indicator, which is a composite of things that would take you too long to explain. And the bubble indicator is relatively high. It has to do not only with the pricing, it has to do with who owns it, how the financing is taking place, and so on. And it's a relatively high level of bubble. But bubbles don't pop really until they are popped by tightness of monetary policy and so on. You see, we're going to be more likely to ease rates than to tighten rates. And so you have this two-part economy. The easing of the rates is because most of the economy elements are weakening. If you're looking at a lot of the economy, you see a weakening in that kind of economy. At the same time as there's this bubble going on developing. So a monetary policy for both is not going to work because of that element of divergence. So I think it's probably going to produce more of a bubble. I would think it's probably, something like maybe 98, 99, 1927, 28, and so on. But
before the crash.
Yeah, but even the issue of money and wealth, you can, it's not all with money. You start a unicorn. So what happens is maybe, for example, you raise $100 million, but you value it at $1 billion. Now I'm a billionaire and it's worth $1 billion, but yet actually nobody ever paid $1 billion for it and so on. And then that becomes its own money. So this dynamic is interesting. Then there are things, of course, about AI which are interesting, in terms of how the length of time that GPUs last, and then data centers, and what the new GPUs are going to be compared with the others, and how quickly they're worthless. So there's a lot of risk. We certainly must say that whether or not it's a bubble and when that bubble is going to burst, maybe we don't know exactly. But what we can say is there's a lot of risk.
Now, last week on The Spy, I told you guys that if this double top pattern gets invalidated, then you guys should look for a run to 683 and then a run to 6 292, which is currently what we're seeing right now. With that said, this should mark a top for the S&P 500, even if we do go slightly higher. And like I've said in previous videos, I'm overall looking for a pullback down to 574 and then a pullback down to 532. Going into the rest of the video, I have some important levels for you guys to watch on Apple and Amazon, ticker symbol AMZN. Let's go ahead and begin with Apple, ticker symbol AAPL. So Apple's main level of support is going to be at 265. If buyers cannot keep the stock above 265, then I want you guys to look for a 4% pullback to 258. And if 258 fails to hold that support, then look for a pullback down to 252. Below 252, the bear's next target is going to be at 246. And from current price, we are looking at a decline of over 8%. Overall, to the downside, I'm looking for a pullback to 240 for Apple. Now, to the upside, if Apple can stay above current support at 265, then I want you guys to look for a 1% continuation to 273. And if the stock can get above 273, then look for a run to 280, which from current price would be a return of over 4%. Next is Amazon, ticker symbol AMZN. So Amazon's main level of support is going to be at 223. If buyers cannot keep the stock above 223, then I want you guys to look for a 5% pullback to 217. And if 217 failed to hold that support, then look for a pullback down to 214. Below 214, the bear's next target to the downside is going to be at 208. And from current price, we are looking at a decline of over 9%. Now to the upside, if Amazon can stay above current support at 223, then I want you guys to look for a 1% continuation to 232. And if the stock can get above 232, then look for a run to 238. Above 238, the bull's next target is going to be at 242. And like I've said in previous videos, my overall target for Amazon is going to be at 257. And from current price, we're looking at a return of over 12%. Alright guys, if you liked today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.